What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about market technicals. You guys absolutely love these videos on big tech, technical analysis on these magnificent 7 to 8 stocks. We're going to talk about Apple, Amazon, Google, Microsoft, Nvidia, Tesla, AMD, Meta, all these companies. I'm going to break down the technicals and of course talk about the S&P 500, the NASDAQ, the percentage of stocks trading above below their moving averages so that it helps you with planning your trades for the upcoming weeks. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate it. And links to our Discord and Patreon is going to be down below. We're almost at 75,000 subscribers. So thank you so much for being a part of our channel and our community. I could not appreciate you guys enough. And again, there's 16% annual discount for our Discord does expire tonight. So after September 30th, the early bird investor discount will go away. So link's going to be down below. So let's just get started. First things first, as we usually always do, let's talk about percentage of stocks trading above or below certain moving averages. And this is a metric that we have talked about and it's helped us tremendously in our trading because, it basically tells us the overall technical breadth behind the market. And right now we are once again selling off quite aggressively. Again, we came down to as low as 11 to 13%, but we're not quite there at that 6% level that I've been eyeing for some time, the same level that we were back in March and in December and in October and during that April and March of sell-off. So these last 4 instances, we have come down to pretty low levels and we're talking single digits. We're talking 6 to under 2%. And those all have been very, very good buying opportunities. Of course, the risk reward is starting to look better and better each day as the markets are, pulling back. We're down 7 to 8% from our recent highs. So yes, dollar cost averaging opportunities are starting to look very appealing, but obviously they can be much, much better. And these are some of the levels to really be paying attention to, right? So S&P 500 stocks above 20-day moving average, only 13.5%. In other words, 87% of the stocks right now are trading below their 20-day moving average. When it comes to the 50-day moving average, we are already there. So a lot of stocks are already trading below their, 50-day moving average. So we are already at that 14, 15 levels. So this right here is the same level as where we were back in March of 2023. So that was obviously a buying opportunity for stocks. And we are once again at the same level. Of course, we're nowhere near close to the October lows, which was again in the single digits. We're talking 2 to 3%, which would be ideal. That would be a very, very good buying opportunity for the market. Of course, if we do end up selling down to those lows, that is going to be a no-brainer. But right now, we're going to have to make do with what we can get. And right now, we are at 14, 15%, meaning, again, about 85 to 86% of stocks in the S&P 500 are trading below their 50-day moving average. That is a lot of technical oversold conditions for the overall market. This is going to be percentage of stocks trading above their 50-day. This is not just S&P, but this is the broader market. So all stocks put together, all stocks combined. And what we are working with here is about 23%. So that's really where we are. So again, this is that number. So about 78% of stocks right now trading below their 50-day moving average in the entire market. This is about the same level as where we were back in March. So you can see the dates down below. And again, we are not quite low as October or again in 2022 during those bear markets, but these are still pretty good levels in my opinion. Now, this is going to be percentage of S&P 500 stocks below the 200-day moving average. Now, this is one of my favorite indicators, and the reason for that is because we are working with the 200-day moving average, right? 200-day is literally 200 days worth of prices, and that is a much longer moving average, and it pretty much takes into account, almost a year worth of prices. And if prices are trading below their 1 year's average price, that is a pretty significant downtrend. That is a pretty significant technical indicator suggesting oversold conditions. Now, of course, back in October, we were once again in those single-digit levels, actually almost single-digit. We came down to as low as 10%. So 90% of stocks at one point were trading below their 200-day moving average. So again, logically, right? Think about it. Think about what that means. Over 90% of stocks were trading below their 200-day moving average, right? Very, very oversold conditions. Of course, we're not there yet. Right now, we're sitting at 40%. So if I go back here, we're sitting at around 39, close to 40%, which again is not, too oversold, but majority of stocks still are trading below their 200-day SMA. That's about 60% of them right now are trading below their 200 simple moving average, similar to what we witnessed back in March, similar to what we witnessed back in December of 22 as well. So 3 instances where we have come down to those levels, and we have, of course, seen some rallies back higher. We've gotten bought up. Now, this right here is going to be percentage of stocks, so not just in the S&P 500, but overall, we're talking the entire market, and that is going to be at around 34 to 35%. So again, very similar to what we just witnessed in the previous slide, and this is, again, the triple bottom. In other words, we are back to the same level back in March and December. So like I said in my previous technical update, risk rewards are starting to look pretty good. So, I would give you a thumbs up. I'm giving myself a thumbs up from a risk reward standpoint that, okay, this is a good starting point. But of course, they're not ideal, right? They're not preferred. They're not ideal. But these are levels where at least I can personally start, right? This right here is the S&P 500. Okay, so this is going to be a very important, analysis in a slide for you, because we have obviously been, this was the 2022 bear market, lower highs and lower lows, consistently selling off, getting rejected here once, twice, 3 times, 4 times, constantly just getting rejected at those lower highs. But then, of course, eventually breaking out. And this right here is the higher highs and the higher low. Now, this higher low that I'm just pointing out right now pretty much dates back to COVID low, right? So from March 2020. So it pretty much is a very, very important trend line. And it's also been referred to as the MOAT. And that is going to be the mother of all trends, right? That is a very, very important support, because not only are we validating here, we're validating here, and we're also validating literally recently. We came down to that support and we got bought up from that level. In case we get a breakdown below this support, right? In case we get a breakdown below this higher low for the S&P, the next support, the important support level, is going to be sitting roughly at around 42 to 4100, right? So this range inside this green rectangle is going to be that level to watch, because previously it's acted as a very strong resistance for the S&P. We've kind of consolidated sideways for some time. So in my opinion, that is going to be a very, very important level of support here, in case, of course, we break down below that support. Now, in case we see a pushback higher, in case we start to see some momentum back up, and again, a lot of these are not predictions. I want you guys to always remember that whatever we do when technical analysis comes into play, we're not predicting. We're playing the game of odds, right? It's all a game of probabilities. We're trying to understand, okay, if this happens, what is likely to happen next, so that we can plan our trades based on the probable outcomes. And in case we see a breakout for the S&P, which, by the way, is coming up to a very important resistance, it's going to be 4330, right? So that's going to be that level to watch, and that's in line with the previous resistance. We literally got rejected here back in, I believe, August of 2022. So this right here was that resistance, and right now we're once again coming up to that level. And what you'll notice is that once we broke out, that old resistance started acting as a support for the S&P. So old resistance acting as a support here, and right now we're getting back up to that level for the S&P 500, and that's going to be sitting roughly, like I said, at 4300. So 4300 to 4330. So that's going to be that resistance level. Support very, very tight. So we are in a very tight range. So next week's going to be very critical. And it's really what's going to dictate market direction here is whether we get a breakout or whether we get a breakdown. Breakdown could send us down to 4200, 4100 in that range, in that green rectangle, as I mentioned. And of course, a breakout can put us on the map to getting back up to 4600 once again. Now, one more thing I want to point out is that we are also in the context of this downtrend, right? This is something that we have been tracking in our regular market updates as well. So if you go back and check our just regular market updates, I've been talking about how the markets are starting to look weaker and weaker day by day, because this is the downtrending channel for the S&P 500. So once again, this is the resistance, this is the support, a very, very tight range. A breakout can once again put us on the map to this level, which I mentioned in our Discord was around 4,500. So that's going to be that level, 4,450, 4,475 to 4,450. And of course, if you get a breakout above this, then this downtrending channel is going to be invalidated, and that's going to put us on the map to getting back up to 4,600 and resume this market rally that we've been witnessing in 2023. So, a couple levels to pay attention to going into next week, so that you don't get confused. The first one, obviously, this big resistance that we're coming up to, that's going to be 4330. And of course, we've got a very tight support sitting right there. That is going to be, I believe, at around 4,300, right? So 4,300, that's going to be that support. That's the higher low. That's the mother of all trends. And in case, again, we get a breakdown, then we'll reevaluate the situation and where the markets could potentially go. Support here, near-term resistance here, all the way up to over here at 4,600 on the S&P 500. So those are very, very critical levels to pay attention to. Now, going over to NASDAQ here. NASDAQ is a very, very similar trend where it is making a lower high and a lower low, but the difference is that it actually broke down from its higher low. So this right here was the higher low, this right here was the higher low, this right here was the higher low, and then eventually got a big breakdown here, and since it's been selling off, and we have just been making this lower high and lower low pattern, right? So of course we are in this downtrend at the moment. So very, very important support coming up here, 13,100. So that's going to be that level to watch for the NASDAQ right now. If you get validated, if you do see some momentum back up, then that lower high is going to be the one to watch. That's going to be sitting roughly around 14,000 for the NASDAQ as well. So very much in a downtrend right now, showing signs of weakness. Yes, we did see a significant rally on Thursday, but on Friday we did see an intraday sell-off of over 1%, which definitely means a lot from a context of an intraday price action standpoint, right? Because bears definitely did see, bears actually put a lot of pressure on the bulls on Friday, pulling us back down. This is going to be Apple. Now, the reason why I cover big tech more specifically and from a technical analysis perspective is because big tech is what drives overall index, right? 30% of the S&P makes up by magnificent 8 or 9 stocks. And you'll notice that, of course, we were in a very, very tight channel to the upside here. Then we got a major breakdown for Apple over here. We gapped down a couple times. We came back up to fill this gap. And right now we are in this downtrending channel of lower highs and lower lows. So very important resistance right here at around 171, 172. And a support sitting right there at this lower low, which again, if you go across, is going to be sitting roughly at 167. So that's going to be that level. And of course, if you do see a more significant breakdown further down, 157 is going to be very important. That's going to be a level where I could see myself potentially taking a trade. And I believe Apple is going to be down roughly around 20% from its recent highs, from in fact its all-time highs. From its all-time highs, 157 is going to be 20% down. So those are going to be some levels to watch. So like I said, resistance right now, 171, 172. Now it is oversold, right? So you could argue that, okay, there is a bounce back higher to this lower high possible. And I wouldn't argue with you there. I think it is possible. 171, 172 breakout is a probable outcome. And getting up to this lower high is also something that we could see for Apple. And it's going to be sitting roughly at around 179 to 100, actually 182, 183, around wherever that mid-range ends up for Apple. That's going to be that level to pay attention to. So, but right now, of course, we're seeing a little bit of that rejection of 171, 172. So that's a very important level to watch. Now, when it comes to Amazon, Amazon also is on a very similar pattern as Apple. And what we witnessed where Amazon, of course, was the longest time trading inside this uptrending channel, so making higher highs and higher lows, but then, of course, eventually broke down pretty aggressively. So this right here has been the lower high and the lower low pattern. It did leave a gap here, so there is a gap to fill in the 130s for Amazon. And right now, we've got a very strong support sitting right there at around $121 per share. So it's the same exact support that we validated here. And of course, more recently, though, we've just been, coming down to that lower low and getting some pushback once again from the bulls. So gap to fill, like I said, in the 130s, mid 130s, so 134, 135. Right now, very much in this downtrending channel. And that next resistance is actually going to be in line with that gap and that lower high over here, as you can see. And that's going to be sitting roughly at around 136. If you scroll all the way out, it's going to be roughly around 136 for Amazon. So that is a downtrending channel, gap to fill, support level in the 120s, and resistance all the way up to in the 130s for Amazon. Now, talking about Tesla, and Tesla here is going to be reporting delivery numbers tomorrow. So on Sunday, they are going to be reporting some delivery numbers for the third quarter. That obviously is going to move the stock price on Monday, but we've got a very important support here at $240. I could not explain how important this support is for Tesla, $240, right? In case we see a breakdown below this, well, then we got to be ready for this entire gap to get filled and for us to come down possibly in this green rectangle that's going to be sitting roughly in the 212, so low 200s for Tesla. And we are obviously trading inside this downtrending channel of lower highs and lower lows. However, we have come to a pit stop. So this right here seems to be a pit stop for Tesla where we are just at right now. So in case we see a breakdown below this, that's what I have this over here for. That's why, we could expect maybe more downside all the way down to low 200s. But if the bulls do a good job in kind of validating this support and we continue to push higher from here, then the next resistance is going to be this lower high. For this lower high and this lower low pattern, so this downtrending to be intact, this lower high is going to be the level. In case Tesla breaks past this, then this downtrending channel will no longer be valid, so we can just cross that out. And of course, then we'll be watching this red rectangle sitting roughly in the 300s for Tesla. So that's going to be the analysis. Yes, it's a little bit of a tighter channel, but this is where we are. 240, very critical for Tesla. Validating, consolidating sideways at those prices, as you can see. A validation here is going to be very, very good for Tesla bulls and could push us up to this lower high. But of course, a breakdown will be equally bad and could push us down to this low 200 level for Tesla. Now, going over to Microsoft, and Microsoft also is very much in a downtrend. So again, you can see the lower highs and the lower lows. Support level right now validating perfectly over here. So this is the level to watch at around $311. And in case Microsoft continues to validate, there's a possibility for us to retest this lower high. That's going to be sitting roughly at around $330. So that's going to be that level to watch. But of course, in case we see a breakdown, so breakdown can possibly send us down to this lower low, and that's going to be sitting roughly at around sub 300, sitting roughly at $290 per share for Microsoft. So those are going to be some levels to watch. We're kind of like right in the middle of that range, but still very much in the context of this downtrend, right? So still making lower highs and lower lows. And finally, we got AMD, and again, we've got Meta, I think, left as well. But AMD here, again, trading inside this downtrending channel. It is showing signs of some momentum, right? Of course, especially after the Microsoft report came out, but still very much in the context of this downtrend. So we're not out of the woods yet. Just want to make sure that we are clear and we're on the same page. Although there is, once again, very strong support at about $100, and AMD here pushing back higher, sort of validating that support really, really well. And this right here is going to be that lower high for AMD, right? That's going to be sitting roughly at around $110, $111 per share for Advanced Micro Devices. So very, very important support level here inside this green rectangle, sitting roughly at around $100, and a breakdown again is going to be next at around $80 in line with this previous support that we have validated for Advanced Micro Devices in the past. Next up is going to be Nvidia, actually. So Nvidia, I don't even know where to begin because Nvidia has just been so strong throughout these several weeks. $400, very, very important support. Doesn't seem to be coming down to that level, even though we validated ourselves here very, very nicely a couple times. But, you know, we came down to, I think, 410, maybe sub 410 a little bit. But that's where we are, down about 18% from its recent highs, but still very, very, very strong right now for Nvidia. And this is going to be that very important support. Not only from a higher low standpoint, because you'll notice that we validated ourselves here, and that's going to be that next higher low. And also we've got a gap to fill that Nvidia left. So you can see that gap over there. Nvidia may need to come down eventually to fill. That's going to be sub $400 right now. Of course, resistance sits at all-time highs. It's sub over $500. And Meta here, finally, also very strong, similar to Nvidia. Hasn't really come down all that much. Very, very stubborn. So this right here is the overall downtrending channel still, but it is still struggling at this lower high. So it's not really seeing a huge breakout. So you can see that, you know, even on Friday, we got rejected here. So you can see that red candle. That's going to be sitting roughly at around 305, 306, and a very strong support sitting right over here that we have been validating for some time. That's going to be sitting roughly at $300, actually $275. So $275, very, very strong support. In case we see a breakdown below this, of course, then we are potentially coming down to this lower low in the 250s, and not to mention a couple of gaps in the 230s, 210s, and all the way down to 160s and 170s for Meta, which obviously we left, last year. So actually earlier this year. So that's where we are for the overall market. Let me know your thoughts down in the comment section below. Hopefully this video is always helpful for you guys to better understand where we are from a technical standpoint. Make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buying alerts, options alerts, trade ideas, everything's going to be included. As always, happy investing. I'll see you all in the next video.